For now, though, I believe we've got Chris Conway joining us from the Australian Stock Report. Chris, welcome to the program. Thanks so much for joining us. I guess, what do you make of the bit of this breather, this pullback, this bout of profit-taking we've seen for the past couple of days?
Good afternoon, guys. Nadine, I would echo Martin's sentiments that given the rally that we'd seen prior, and that we typically get a rally around this time of year, that it's healthy to see what we've seen yesterday and today, simply because, you know, we can't continue to move up in a straight line. Obviously, again, as Martin said, the bond story, the China-US bond situation overnight probably provided a bit of a catalyst for the sell-off, obviously, in the US, and what we're seeing again locally today. I think a bit of a storm in a teacup on that one. You know, I think it's some posturing from China. And I think it's sort of a warning shot firing to Trump, saying don't blow up the US budget with all these tax cuts because we own a whole lot of your debt. And also, as they head in toward trade negotiations as well, just China reminding the US of, you know, the significant pile of US treasuries that China still holds. So I think that's an issue that will pass. I don't think we have to worry about that too much. But just more broadly, I think this pullback is healthy and one that was probably a little bit overdue.
Yeah, healthy pullback, Martin?
Yeah, I think so. I mean, I don't like to think of pullbacks as healthy, but I like stocks going up, not going down. But
nothing goes in a straight line.
As I said, 16% in a little bit over a month is probably run a little bit too hard. So having a breather and allowing, you know, investors to perhaps participate in a bit of a pullback and buy things at more attractive levels makes a lot of sense.
And Chris, I think worthwhile keeping in mind that especially here in Australia, we still are in holiday mode to a certain extent. I mean, what are volumes sort of like out there today? Do we have to factor that into any of these sort of swings and or roundabouts that we're seeing on the market at this time?
Yeah, I would think so. Look, my mind takes me back to a situation, I think it was a couple of years ago, where there was a very contrived, if you will, December, January rally. You know, it was a rally that happened, the market put on sort of 8 or 10%. It didn't really feel as though it should have. And then in February, I think we had some worries out of China and everything fell in a heap. So, yes, always when there's low volumes, moves can be more pronounced. And again, you know, we're getting right now what we all expected. You know, everyone in December, myself including, was rolling out the statistics of when we get a Santa Claus rally, the probabilities of it, the likely percentage moves. We've got what we were expecting. And now I think the bigger question is what happens as we head into US reporting season and local confession season, and again when everyone's back at their desks and thinking seriously about how they're going to position their portfolios for the coming 12 months. So I think, yes, right now it needs to be taken with a little bit of a grain of salt, but for me as a short-term trader, my rule is you keep riding the trend until it turns, and I don't think in the past couple of days, although we have seen 2 down days, that the trend has changed.
Martin, just to Retail Food Group, which Chris referenced there, and it was in our top stories. Confession season, I should say, really. We've had a couple of really big ones coming from Retail Food Group over the past few weeks. I mean, how do you read this story and where it's going to end?
They're permanently in confession season,
yeah.
These guys, aren't they?
That's one way to look at it.
Yeah, look, it's a really tricky one. And then the macro environment, I mean, the retail sales number that was out today for November was a beat. That looked really good. But the environment more broadly has been very, very difficult for retailers that are in shopping centres, shopping malls, because they've doubled the size of the footprint. So that's made competition for our lunch dollar quite intense, and RFG's right in the middle of that. They've also got these issues with how they're dealing with the franchise owners as well, so that's tricky as well. So you've got a difficult macro environment, difficult micro issues going on within the business. So, you know, it's going to be a bumpy road for RFG, and, you know, I don't think this story's sort of played itself out yet. I think there's still more to go with RFG.
So stay away from it? Too risky?
Look, it's off the scale from my risk tolerance.
Yeah.
You know, if I was a younger man, I might have a greater appetite for risk, but yeah, I'm a little bit more conservative now, so I'd stay away from it. Even though it looks attractive because it's fallen so far, I think it's too hard.
All right. Chris Conway, Australian Stock Report, talking about that retail sales read, what a day for the likes of JB Hi-Fi. Coming out on the back of a broker upgrade, up a further 5%, last I checked actually, up now 5.8%. How do you view JB Hi-Fi, given the most recent retail read from November, given this broker upgrade, but also touching upon what Martin's alluding to, is that the going is tough out there in bricks and mortar land?
Nadine, I was always wondering why JBH had got caught up so badly and sold off so badly with the whole Amazon story. Yes, I understand the impact of Amazon and potentially what it might still bring in the future, but JB Hi-Fi to me was a really quality retailer. If you look at the way they've grown their sales, I think last time out or the second last time out, they had a circa 8% like-for-like sales across their stores. There's still growth to come from the Good Guys acquisition. Last time out, the growth numbers there were flat, but there's still some synergies that are to be extracted, and you know, just the management of and the integration of that business, as I said, will yield some benefits. They've got a great footprint, and again, it's a brand everyone knows. So, look, I'm not surprised to see that it has rallied back. Being where it is now, though, I probably wouldn't buy it because it is just in terms of price action getting up towards some recent peaks. And there are those longer term concerns there still because they will have to compete against Amazon, and Amazon's going to grow and operate in their space. But I think just fundamentally it's a business that is extremely well run and has at least got the DNA to fight that competition from Amazon and wherever else it comes from. More broadly in the retail space, you know, the retail space is very hard for me. It's, you know, the strong will get stronger, the weak will die. The difficulty is figuring out which one is which. And as I said, we just have a story there of JB Hi-Fi that got caught up in that maelstrom, which I didn't think it deserved to be, and is now coming out the other side of it. So even when you're right, you can be wrong.
I'm curious to get your thoughts. Martin Crabb from Shaw & Partners here was saying that a lot of clients asking if they've missed this rally in some of those big resources names, how they should play the story at this time. I understand you're selling BHP. Why are you selling?
So this is all about the starting point, and I think Martin sort of alluded to this as well. We had bought BHP sub 27 last year, and we had a target price on it at 31. We got out, I think it was on Monday, slightly short of that. Obviously it's been over that and probably just hanging around or slightly below that $31 region right now. Just in terms of price action, it looked overbought, and in terms of valuation, it was sort of at the upper band of what we like. But I'm not negative on commodities. That's, I think, the broader point here. We're in a position where we could take a solid profit. We did. We would very, very happily buy this stock back if it pulls back a little bit further. If it sort of trades back down to 29 or mid-28s, we would be back in there, no problems at all. So very much like the commodities story, like that it's linked to global growth. And the story that we all know about there. Now just waiting for another opportunity to buy back into you know, the likes of BHP, Rio, Fortescue, which all have had pretty strong runs. As Martin said, 16% since, I missed the date, but recently.
Well, talk to us about oil and gas. I mean, are there any of those large cap names that you're looking to pick up on a down day in that space? I mean, we've got Woodside off by 0.4%. Santos is down more than 1%. Even Beach Energy, which sometimes has gone its own way lately, is down by about 2%. Oil Search off by 1.5% as we speak.
Yeah, so similar story here, Nadine. Again, liking commodities, just going a little bit further with the oil story. I think the fundamentals in the oil space are strong. So obviously we've got the OPEC interventions which are constraining supply, but when you look back over the past couple of years, the amount of oil production that had gone offline has not been replaced in terms of, say, capex spending. So there haven't been oil companies going out there and replacing, you know, what they've been taking out of the ground in terms of new explorations and new wells. So we're moving, you know, slightly longer term into a period where production will be lower or constrained, but supply with the global growth story should be picking up. So that's a dynamic that I think that will support oil prices, and hence why even after a pretty strong run, we're not adverse to adding names like Woodside or Oil Search at the moment. Again, the preference would be to buy them on a pullback. But if you can't get it and one doesn't come, like I said, I think the fundamentals of the oil market will support those stocks.
Look, I'm going to be getting Martin Crabb's Fab 4, get your picks a little bit later in the program, so our viewers should stick around for that. Chris, before we let you go, talk to us. I love knowing what clients are asking about. I think it gives us a really good take on, you know, really what matters to people. What are your clients, perhaps outside of that large cap space, are asking you about as we start 2018?
So a lot of clients recently have been asking about marijuana stocks, Nadine, and it's not previously a sector that I would have covered, but when my clients ask me for something, I try and deliver for them. And I think it stems a little bit recently from the listing of a company, Elixinol, EXL is the stock code. Came online on Monday. The issue price was $1. They raised $20 million. It opened at, I think, at $1.40. Sorry, opened at $1.75, forgive me, traded down by the end of the day to $1.45. And as I was leaving for the studio, is up around $2. So in the space of 4 days, it's doubled in price. So that's where the interest comes from, obviously. And we are in a bit of an environment at the moment, what with cryptocurrencies and so on, where there is some speculative mania, if you will, in certain pockets of the market taking grip. But my advice to clients is, don't be scared of this space. It is a growing industry. It's tipped to be worth $500 billion by about 2029. Locally, the market's worth about 100 million, tipped to grow to $1 billion by some. But again, the advice to clients would be maybe don't buy the one that's risen 100% in the last 4 days, and look for the ones that are producing, are selling, and of course selling into the US now because as most of us might know, the state of California in the US has just legalized not only medical marijuana but now recreational marijuana as well, and that's causing huge sales volumes over there. Will we see that in Australia? I don't know, but certainly medical marijuana is here and is a growing space. So as I said, look for companies that are already producing, already selling, and if possible, look for a management team that has got some experience at other either pharma companies or medical related companies.
Okay, Chris Conway, Australian Stock Report, always a pleasure. Have a good afternoon.
Thanks, guys. Cheers.